KPIs are the ultimate scoreboard for ensuring your success. Without them, you are left guessing. When tracking KPIs, it is important to know the difference between the two types, lagging and leading indicators. Lagging indicators focus on the past. These are useful for confirming trends and changes. For example, maintenance spends, technician hours billed, and vendor speed of repair are all lagging indicators. So in hindsight, you can see that you averaged $627 on repairs. Your technician averages 25 billable hours in a 40-hour week, and you had a huge bottleneck with HVAC vendors in July. When looking across multiple weeks or months, this will allow you to confirm trends. Leading indicators look ahead and attempt to predict future outcomes. To further elaborate on the previous three examples, a high maintenance spend might have a leading indicator when compared to others in the industry. Low billable hours logged by your technician can be troubleshot by analyzing their tech utilization rate, and bottlenecks with specific vendor types can be mitigated by looking at their scheduling lead time. So why not just use leading indicators, since they inform where you're going with your business? Without corresponding lagging indicators to confirm where you went, you're vulnerable to measuring the wrong data and making important decisions from it. Because there are so many KPIs in property maintenance, we have devised a multi-level approach called the ladder of maintenance excellence, similar to Maslow's hierarchy of needs, in which you cannot advance to higher levels without first satisfying the most basic human requirements. The ladder of maintenance excellence starts at the bottom with proper engagement. Without a firm handle on engagement, you cannot successfully move up to scheduling efficiency, and so on. Think of it as a roadmap to the holy grail of property maintenance, predictable net operating income. Along the way, strengthening resident and investor retention. We've compiled a list of the most essential KPIs and their ideal target range, grouped by their category on the ladder. But what good is any of this if you can't track it? Well, that's what Molly's going to show us, using Property Meld's powerful data tool called Insights. Molly, take it away.
Hi, everyone. Having the ability to measure something is only half of the battle. If you don't know how to measure your KPIs or identify what is good and bad, or how you got to where you are, data really means nothing. Keep watching to learn about some of the crucial maintenance KPIs we've been tracking at Property Meld, what they mean, and how you can use them to make strategic business improvements. So first, we're going to talk about speed of repair. And speed of repair is more than just a metric. It is your key to resident satisfaction and renewals. Let it slip and you'll see your churn rise faster than a leaky faucet turns into resident complaints. If your repair speed starts creeping up, check the vendor and technician performance tabs inside of Insights Pro. These dashboards help you break down performance by employee, work category, and action timeline, helping you pinpoint exactly where bottlenecks are happening and your top performers. According to our KPI cheat sheet, industry leaders are keeping their speed of repair between 3.4 and 6.8 days. Crossing the 6 to 7 day mark is a red flag for increased turnover, so stay ahead by tracking and optimizing your repair lifecycle. The next metric we're going to discuss is resident satisfaction. And resident satisfaction is another key KPI that directly impacts churn. Think of it as your report cards. Residents are grading you on repair speed and quality. The ideal score? 4.2 to 4.6 out of 5. If you're seeing more negative reviews, Insights Pro can help you analyze satisfaction scores across work categories. You might discover that your HVAC tech is underperforming, while Bob the Builder is a resident favorite. Slow repairs often signal future complaints, so tracking both metrics is crucial. And just like you wouldn't eat at a restaurant with less than 3 stars, prospective residents and owners won't trust a property that has poor satisfaction scores online. Annual spend per unit is your early warning sign. When maintenance costs start to exceed 12% of rent roll and repairs drag beyond 6.8 days, investors are going to start looking for the exit. Use Insights Pro's benchmark page to pinpoint overspending by work category. You can even filter by region. Leveraging this data helps you fuel revenue growth and negotiate better deals with your vendors, cutting costs while keeping them busy. Next, we're going to talk about your vendor health score. This measures whether your contractors are MVPs or just benchwarmers, with 100 being the league average. This index helps you assess if vendors are timely, cost-effective, and resident approved. With Insights Pro, you're able to track vendor performance, ensuring they accept, schedule, and complete work in line with your standards. A strong vendor network means consistent, high-quality service and fewer headaches for you. Next is your technician utilization rate, and this is really a scoreboard for how busy and billable your techs are in a 40-hour week. High numbers mean they're in the zone, and low numbers signal inefficiencies or downtime. If expectations aren't being met with your internal team, check their average melds per day and hours logged in Insights Pro. A tech logging 8 hours on a leaky sink may appear to have high utilization, but that's hardly efficient. So make sure you're digging into the data to ensure that their productivity is matching performance. These major KPIs are the vitals that help surface problem areas in your property maintenance operations. But without the in-depth metrics provided by Insights Pro, you won't be able to efficiently get to the source of the problem. So keep watching our next videos where we're going to take a deeper look into each section of Insights Pro and analyze the metrics in each step of the ladder of maintenance excellence.